The Morgan Report with David Morgan.
David Morgan of themorganreport.com for the weekly perspective for the week ending 6 May 2022. Well, not a half year gone, but first quarter is tucked away. So just a reminder for everybody that's on the free list. We say here, that you get and you do. Every week I do this. Every week I do perspective and get analysis on the financial markets and the metals markets. And it's from yours truly. It is brief. I try to keep them under 15 minutes. So I'm going to start with the stock market as I usually do. And the sell-off continues. Been saying for a while now that I think the stock market has peaked. And the most likely trend is stocks down and gold's up. They're not doing that at this moment. The mining shares are sympathizing with the overall stock market. They are stocks. There's uncertainty in the market, and no one's making real major moves. But DJI is showing weakness. The Standard & Poor's 500, the SPOOS, is making not new lows, but selling off again. And the NASDAQ Composite looks weakest of all, and it is pretty close to a recent from like December on to this year, so 5-6 months, almost making a new low as I'm making this video. Bond yields, of course, we had a 50 basis point increase in the bond market, and the yield on the 10-year Treasury has risen above 3%, and it's trading at the highest level in more than 3 years. And yet the federal funds rate is still below 1%. If you're going to attack inflation by raising interest rates, which is what the Fed is purporting to do, it can work. I won't deny that. But these type of moves, giving this much of a change, portends the fact that it's going to be impossible, in my view, for the Fed to raise interest rates very high. It doesn't mean they're not going to raise it 5 more times at 25 basis points to 50. Who knows? Time will tell. I'm pretty much in the camp of the majority of free market thinkers that this is not going to go for very long. The Fed's going to run into the wall and they're going to soften their stance, but time will tell. So I did the 4th episode of the Silver PSYOP with John Forrest Little. Had a nice conversation with him. Paying for war. He did some pretty good look back into history on how wars are paid for. And this interview here I did with Chris Rice. It's one of my favorites. It's a long one. But we went through a lot of stuff, and he's got a platform that's different than Zoom. It's a very robust platform, and he was able to bring up a couple of the videos I've done in the past that are a couple of my favorites. You may find them interesting as well. I'm going to briefly run down some of the headlines here. Making this in the morning, markets open. Gold is holding steady here, even with the increase of 428,000 jobs in April. Bitcoin is getting sold off nearly 10% as I'm doing this. It can change. What's next for gold and silver? I think further consolidation, probably a little bit more weakness. The commitment of traders is vastly improved, especially on silver. I do think we're reaching a low. I also believe that 2150 is probably as bad as it's going to get. I believe that it will hold in that area and bounce up. It may not get that low, although it's pretty close. It's happened twice before. And we will have to wait and see. And gold is actually showing some resilience in light of dollar strength. And I've always talked about the extra pyramid and that gold and a dollar will move together near the end, meaning when the dollar finally caves and the run to gold begins. Seeing a bit of that now. There was a great interview by Ray Dalio of Bridgewater talking about the Fed's dilemma as being as great as it was since the 1970s. I think you can find that on Kitco. And another one that came to the fore this week is one that I've only met Frank Justa face-to-face one time. I doubt remembers me, not that that means anything. But had a big interview with Kitco, and the interview is gold prices manipulated by the Fed, suspects mining tycoon Frank Justa, but suppression can't last forever. Very interesting, someone of his stature, billionaire class, mining mogul, and on and on. It's if you have time this weekend, I highly recommend that you listen to that interview, make up your own mind. And further in the gold and silver news, I would recommend this week going over to Mike Maloney's website, goldsilver.com, and watching the top video here, the Everything Bubble Burst. There's other news in here. A couple, I think, just to mention here, the US dollar is the mightiest of all world currencies, but is its position under threat? Obviously it is, with what's going on with the Russian ruble. And what's happening and has happened with the BRICS for a very long time. They have buffered themselves, I'll say, from the US dollar, and that will continue. And this really is a lot of things, but it's boiled down to not only a war, but it's a currency war. And there's the debate whether or not there's anything going on as far as turning over the card on the banking elite as it stands today, or whether Putin and company are just playing their role in this grand play and the outcome is already determined. I haven't made up my mind yet. I'm not that smart. I think it's most likely that is this case, but it isn't determined, and it is most interesting. And again, this is a good website. I'm going to feature a few more. Fastest Tokyo inflation in decades. Why the Fed rally failed. The Dow Jones has a catch-22 problem. Calls it a catch-2022, which is cute and true. And the S&P, worst sell-off since 1939. So, folks, this is kind of what Mike, myself, and many others have predicted for a very long time. There will be a day, I think the day has come, where the asset classes that are in the most favor, the high-tech, the FANG stocks, start to deteriorate. Look at what happened to Netflix. And then gold will resurface. It certainly isn't now. It's holding up better than silver. Silver's getting creamed, as we all know. Silver's down 11 days in a row. And just a few weeks back, it was looking very good. Looked like it was ready to attack upside resistance. That, of course, is not true now. It's been selling off, as I just said. And Mike did not pay me to promote his website so much today, but I really feel this is the best place to spend your weekend to catch up on, I think, the most important news about the financial markets, gold and silver. Many of you know, follow my work, that I've always talked about the bond market and the bonds being the key to everything. This is a very good update, Mr. Bond. I expect you to die. And Mike goes through his reasoning on that. I don't agree with every word that he says, but certainly the main meme is absolutely correct. Once you lose faith in the dollar, why would you want a dollar that's 6 months out, 5 years out, 10 years out, 30 years out? And it all hinges on the debt markets, or what's known as the credit markets, since which side of the ledger you are, if you're borrowing the money or you're lending the money. But it's not really money, and that's the problem, along with the fact that it can go to infinity, and it more or less has. It's untenable. There's no way to pay it back. Everybody knows it, and everyone's just waiting to see if the Fed will actually tighten enough to maintain the validity of the little bit of power, purchasing power the dollar has, and continue to raise interest rates and really destroy the bond market. In other words, the yields will go very high, and that means the prices of the current bond market will be lower, lower, and lower, or that they give up, throw in the towel, and start reflating even more than they are now. They're actually inflating by the Austrian school definition as they tighten. They're just inflating less. So a lot to be said. I think the last comment, I'm going to try to make this 10 minutes, is Jim Poplava of Financial Sense. I used to be on his show, I think, weekly. I still appear a couple times a year. But a few years back, probably more than a few now, maybe 6, 7, he did a study the whole summer on inflations. And what he determined was there's never been a fiat system that hasn't gone to the, I'll call inflationary destruction, or you could say hyperinflationary destruction, which I really don't think we'll see what I consider hyperinflation, but I don't want to play semantics. I just want to give you the idea. So the only time you've really seen debt liquidating depressions is when gold was the money, gold, silver was the money. So when you had specie money as the money rather than an edict saying it's this piece of paper, you could have a debt liquidating depression. Every time it's been by legal means only, it has failed in an inflationary depression. So that gives you the idea that going forward, the Fed will probably throw in the towel and say, okay, we can't raise interest rates anymore. We need to stimulate the economy even further. It's dying. And the way we're going to do this is we're going to lower interest rates. But from where? You know, if the Fed funds rate is at less than 1% and double it to 2%, does that give them room to lower interest rates? Yes. But ever since 2008, they've been lowering interest rates, lowering interest rates, lowering interest rates. And what's happened? Not much, really. Yes, the stock market has gone sky high. So has that happened? Yes. So let me be more clear. But what has happened in the physical economy has not been much to look at. China has slowed down in the last few years, and yeah, maybe from 2008 for several years beyond, they probably increased their construction and their build out and all that. But it's come to an end pretty much globally. And with the food crisis that's happening, the mistrust, the currency wars between the ruble and the dollar ruble cross, gold starting to enter into discussions, the IMF tipping their hand even further, if they really want what they want and nothing else matters. A lot going on, folks. So I'll leave it here. A lot to ponder this weekend. I would certainly take a look at the bond market, get educated on that if you aren't already. Don't give up on your gold positions. Yes, there's probably some more pain ahead. And for your silver bugs, I do think we're pretty near the washout bottom. Again, silver can surprise anyone, including yours truly. But I believe anything in the low 20s longer term will be really, really important going forward. So I'll leave it at that. This is David Morgan of the Morgan Report, ending this week's Weekly Perspective.